My job is to raise money from the Chinese retail guys and invest outside China. Last year, we actually raised one fund specifically tailored for this luxury industry because as we saw from Mr. Fisher, his analysis, luxury sector is in a long secular booming trend for the next decade. And also we see actually quite a lot of these kind of dedicated funds outside of China. But within China, there's no such a fund. People don't have this channel to invest, to have exposure to this luxury industry. So we saw the opportunity. That's why we actually launched a fund last year. We raised 400 million RMB last year. And now, we are proud owners of all these luxury brands like, LVMH, Prada, as mentioned, also the automakers, BMW, Audi, Porsche, etc. So we are with the shareholder now. So myself, I'm the analyst for the industry, and also I'm the portfolio manager for this fund. So today I'm going to just quickly walk through the industry and how I look at the industry. So the materials are here are prepared for the Chinese audience before. So I didn't really translate the whole thing into English. So let's just bear with me. Let me speak English because some of the materials on the slides will be in Chinese. So first of all, just quickly go over the long-term change of the global economy is from the top-down perspective. So what happened in the last decade or so is the changing power between the developed market and the emerging market. So if you do a calculation of the BRICS, you can see about 40% of the people actually live in the BRICS country. But the actual GDP numbers is only like 20% of world GDP. That's why the emerging market actually is becoming more and more important in the world economy. And if you look at the luxury industry specifically, the penetration ratio is really low, and people are actually catching up on the demand for luxury. And also in the emerging market, as the GDP has been catching up, the middle classes are surging. So based on this government estimate, the number of people making more than $30,000 is going to double within the next 15 years or so. And for the emerging markets, especially for China, it is interesting because the consumption ratio in China is really low. The consumption to GDP ratio in China is only 1/3. Compared to the world average, it's more than 2/3. In the developed markets, like 70%. So a lot of people argue, saying that Chinese economy is not sustainable. It's not going to be, because too much economy is being tied up with fixed investments. Fixed investments, they are not sustainable because after you build a bridge this year, and you have to build another next year just to catch up, to be in line with this year. If you want some growth, you have to build 2 bridges next year, right? So after a while, you end up with too many bridges in China. And that's why, if you are familiar with the Chinese style of building, probably what they have been doing over the years is they keep building and building. The life of the quality of the product is pretty poor. They just pull it down and build again. Just keep the whole economy moving. So clearly, this model has to be changed more toward consumption, which is more sustainable, which is definitely favorable to the consumer industry. This is in Chinese. This is what's the 12th five-year plan from the government. So the Chinese government, they make every 5 years, they make a blueprint for the next 5 years. What they are going to do, which is really important. What's the important guidance for their politics, for their policy. So they clearly understand that the consumption ratio in China is too low, and they have to increase it. And to do that, they really have to to make some policies to encourage spending. People love spending, right? I mean, Chinese, you go on the street, you go to Shanghai, probably at this time you cannot find a restaurant seat. I mean, people definitely are spending, but to increase the spending ratio, you have to have money, right? You have to actually put the money into the pockets of the people. So in the end, the government has to find ways such as cutting taxes or transfer payment to put money in people's pockets. So the good news is that the government is clearly understanding the issue, and they are doing it. They are currently cutting the income taxes for the mid to lower income people. Also, they are cutting taxes for the small enterprises. The Ministry of Finance has been talking about for several years cutting taxes for the luxury items. They've been talking about it for like 3 or 4 years, but they didn't really get into action yet. Given the higher price of Chinese luxury items, which is more like 30-40% higher than is sold in Hong Kong or in Europe, so the room of cutting taxes is quite high. And if the selling prices, the prices for the luxury items come down, and you can see a lot of pent-up demand in China. So these are some policies they already made, such as social housing, medical reformation, like cutting taxes. So those are policies they are already working on. Another phenomenon is that as your income improves, so the ratio of between consumer staples and consumer discretionary, definitely you're going to see more discretionary, right? That's very reasonable. So for the luxury industry per se, like this old guy, right, Warren Buffett, he used to say that he likes this kind of business which has just like a economic castle protected by a moat with some crocodiles swimming in it. So basically he's saying that he likes some business with a higher entry barrier, such as Mr. Fish already mentioned, the luxury industry, because of the brand, because of history, the design, and the high cost of marketing. So the entry barrier is quite high for the luxury industry, and the profit margin as a result is very durable. So in China, what's happening is this. You see I'll take a few pictures. The first one is a Chinese liquor, Maotai. The second, the LVMH store, people buying they say that people buying LV bags like buying cabbage. People just line up and buy the LV bags. And you go to they opened some duty-free shops in Hainan, in one of the provinces, one of the islands, and the people line up hundreds of meters in line to buy that. And then you see that in the auto market, it's very interesting. In the auto market, people actually line up for almost half years to buy an auto. And they pay up to get reservation, to just get reservation to buy it. They pay. They usually pay like 40,000 RMB, so like $7,000 to just get a number in the sequence. So I just went to a few dealers in the last few days. I went to BMW and approached some dealers. I said, do you see any slowdown in China, given the weakness of the economy? They say not much. The waiting time has been shrunk from like 6 months to like 4 months or 3 months, but still people are still paying to wait in line, which is really interesting, right? Like the BMW X5, which is selling probably $70,000 in the States. They are selling like it's like 1 million RMB here. So it's like twice the price in the US, but still people kind of have to wait 3 months to get a car. The Chinese liquor, Maotai, is a good example. So if you ever drink it, never drink it, so maybe you can give it a try. But my advice is don't buy it on the street, because this Chinese liquor, the 90% sold on the market is fake. Why? Because they did a survey. All the consumption per year compared to the production per year says 90% is fake. How much they sell the liquor? they sell over 2,000 RMB, $300 per bottle. So the other day I met Diageo. They manufacture the black label, the Johnny Walker, right? I met them. I said, given the what's happening in Europe, people talking about global slowdown. Do you think you will be affected by this, macro weakness? And they said, because our alcohol is selling pretty high prices, and we will be affected. People's income will be hit, and they will spend less on the drinks. I said, how much do you sell for? They said, $35 per bottle. I said, do you call that a high price? That's not high, right? $35 per bottle, people consider very cheap in China. This means they are selling $300 per bottle. So that shows you the potential of the luxury market. So this Chinese liquor is the luxury item in China. It's one of the few types of Chinese luxuries people spend on liquor. And also you can see the wine. The wine, so a lot of Chinese collectors, they push out the Lafite. The Lafite wine just price went up tripled in the last few years. And also you see the antiques in the arts market. So the second one, third one is well recognized. The first one is a Chinese master. So his painting and his calligraphy last year sold for 425 million RMB. Those prices are actually comparable to the world masterpieces. That shows you the liquidity and the amount of wealth in the system. But my point is that, rather than putting up a lot of money chasing all these high-priced arts or collections, maybe it's a better idea to just buy the stocks. Why? Because, if you buy the actual item, you have to store it. The storage cost will be pretty high. If you have to probably insure it against the stealing, right? You have to probably think of ways to really keep it in good shape. And also, the second consideration would be the transaction cost. You go to Sotheby's to bid for with nice porcelain or something real, you probably pay 15% transaction cost. But you buy a stock, it's much easier. So our fund has invested all this majority of all these brands. So we are a collection of luxury stocks. I borrowed some data from Mr. Fisher. So your report, I love your report. Thank you very much. So there's a lot of coverage in the news saying how big the China market is going to be. And some says, China is going to be the number one. Some says China is the number one. Some says China is number 3. There's a lot of coverage. There's some misunderstanding, but also there's some difference between how do you actually do the statistics, right? Because in China, the big part is people spend is on like soft items, watches, bags, belts, briefcases, those small items, personal items. But like yachts, helicopters, autos, those are still quite small. So if you include autos, yachts, helicopters, planes, the China share will be smaller. But if you only count the personal items, the China share will be higher. Anyway, so I go with this Mr. Fisher. I think this is very good. So this shows you the clear. So the China's standing in the world. The China mainland market actually is quite small at this point. It's only less than 6% of the total world market. If you count the Macau, Hong Kong, Taiwan, all these markets together, they make up like 11%. Then they are bigger than Japan. So the so-called Greater China region, so that they are the fastest growing market in the world. So in last year they grew more than 30%. So in the next decade, so it's going to be a secular growth story, but could be some bumps over the road with some macro concerns. This already we see the chart before. This is from Goldman, so it's also confirming similar trend. the annual CAGR is going to be in the mid-teens or 20%. This story actually is not only happening to China. It's also happening to Brazil, India, right? I met with Prada management the other day. They said they are opening more stores in India and in Brazil, but they have a problem with the infrastructure. They say in India, they can open up the stores, but they don't have the roads to get there. So, but the people actually, that shows you the potential of the market. After they build up the roads, then more people are going to buy them in the malls. So actually for a lot of brands, so they are already selling around 30% to the Chinese. So the other day I saw like a statistics of all the brands of different region, breakdown by the region. You can say around 30 to 40%, close to 40% of sales goes to Europe. Then around 30% goes to America. Then another 30% goes to Asia. Asia, Japan is one piece, one big piece. The remaining is Greater China. This one is already, we saw this chart before. So luxury items is the fastest growing category within the consumer space. Consumers are already one of the fastest growing in China, and the luxury is the fastest growing. Another interesting phenomenon is the brand recognition is very important in China. This shows you the top 5 brands of each category, either watches or bags. So each top 5 brands, they make up almost half the market. So people, they really concentrate a few brands. That's actually why is because the brand loyalty, brand image, heritage. The other thing could be relating to the culture. The Chinese people, if they buy, the traditional culture would be, if they buy something, probably they want somebody else to recognize it or think highly of your taste or your social status. So if they buy something better to be some famous brands, somebody else can recognize. So in the stock market, what's happening, what we observed is that actually the luxury stocks did pretty well over the after the financial crisis. So they did well than the consumer staples, the better than the general market. Recently, after August, the luxury stocks actually sold off because the luxury stocks, they are perceived to be more risky than the general market. In our own term, we call it high beta. Basically, if the market goes up 2%, 1%, it goes up almost 2%. If the market goes down 1%, it goes down almost 2%. So it just goes up or down more than the market. That's the nature of the stocks. So although this is a long-term secular growth story, so in the short term, we still try to manage the risks. So from the inception of the fund, since July, the luxury sector stocks came down almost 20%. So we did better. We actually lost only 5%. So we have to invest. We are a mutual fund. We cannot go short. We go long. So what we did is we use the weakness of the market, use the volatility to actually buy on dips, buy in the weakness, and we kind of weather the storm pretty well. So right now we are still 5% below the water. And this is our fund information. So our fund, we invest in a few things. First of all, we invest in the traditional luxury brands. As I mentioned already, like bags and autos, all those watches, all these things. And secondly, we can also invest in the dealers or shops or department stores that are specifically selling these items, like a Hungary is a watch seller, like watch distributor of Swiss luxury watches. The third is that we can also invest in the luxury services. Not only physical goods, we can also buy luxury services, like a 5-star hotels, for example, right? And lastly, we can also If you like, we can also buy some gold, silver, diamonds, all those luxury, all those materials that made, materials for luxury items. And this is our index. The index is called the Dow Jones Luxury Index. It's made up 30 to 40 companies. They update every quarter. So the biggest 5 positions is like names like LVMH, Christian Dior, PPR, and Richmond, and then BMW. Those names are the most the biggest names. Okay, that's my. I'll just conclude, and I don't want to hold you for too long. Thank you very much. If you have questions, please ask me.
Thank you very much for your presentation. There is a question or two, 1 or 2 questions maximum before the conclusion, please. The mic, please. Second one, okay.
I'm fully aware that you are a mutual fund, but yesterday the question about Chinese investors acquiring foreign brands was raised. Is there any ideas or insights you can share with us?
Yeah, I think that the Chinese guys, they actually, they have a lot of cash on hand. They try to buy Western brands. But the problem with this approach is that, they usually find after they bought the operation, first of all, it's hard to integrate. Secondly, the culture and the heritage and design of those brands probably don't go too well with a lot of Chinese firms. I'll give you one example. The Chinese one is called Chile Auto. Is one of the they manufacture very cheap autos. They sell like 50,000 RMB, right? They have the money. They wanted to buy Volvo. Volvo is one of premium cars. So they currently keep the Volvo operation intact, but still need to be to see how they actually integrate and how the brand image will be perceived by the Chinese later on, right? And another trend I see more is happening is that actually foreign companies is buying domestic brands, like Shanghai Times already acquired by Richmond. Another one is, as I mentioned, the IGO bought the stake in XueJun. XueJun is one of the premium liquor brands in China, and I think it's a very good investment.
I was also thinking about private equity investments,
Yeah.
And then floating, exiting on Hong Kong Stock Exchange, things like that.
Yeah, but the problem is that the real good brands, first of all, there are not many left, right? They all went public. Maybe Chanel still in family hands. Some Miss Millennium, your firm still, but you're not for sale, right? So the PE firms, if they want to buy something, it's very hard to find a good target. If you buy something not good, they cannot float in public. Yeah.
But yesterday, Mr. Cooper, Roy is a private company, and they might be looking for investors.
Yeah.
Anyway, you're right. It's very hard to find the right target. So I agree with that.
Last question, please.
你好。我这边就是想从这个投资者这个角度啊，比如说就像你们现在投资的这个方向，那么你们如何去保证就是比如说我这边会投1000万或者2000万去投资？
你敢哥？
对。就是说从这个投资者这个角度来看的话，那我们可能都知道奢侈品它是需要一个培育期，甚至说它需要很长的时间去培育的。那么对于中国 至少我了解到，就是很多人他买基金，他可能希望很快的有一个增长率。那么如何去保证就是投资者这个收益呢？就目前你们做的这个产品。
Okay. Hopefully I understand your question. He's asked me that investors may be really, investors are kind of impatient. They cannot wait long to get returns. And how do I guarantee the returns? Okay, as a funding manager, I cannot guarantee any return. So as I said, after we launched the product, I lost 5%. Okay, the market lost 20%. I lost 5%. I feel pretty good about it because I still believe in the long-term story of the sector. I think when the market is getting a little normalized after the European situation getting a little clearer, so we have a good chance to make better money and make some profit. So I just want the investor to be patient, to agree with us on the long-term investment horizon on this sector. We don't want to guarantee any returns. Thank you.